Does anybody here have seen companies go to bankruptcy? Have you ever asked yourself why this used to happen? Most of these situations happen because owners don't have an idea about accounting principles. These are defined by rules that ensure businesses follow the same financial practices in order to succeed. Since I graduated from the university in accounting, I worked helping small businesses with their revenues and expenses. I have determined that without accounting principles, a business have a high probability of going into bankruptcy. Thanks to accounting principles, owners and financial analysts can determine the financial health of a business and what changes to make they keep business running or to keep the business running. So today I'm going to tell you about the importance of applying accounting principles in a business and ways to be organized to present the taxes on time. So what are the accounting principles? These are the rules and guidelines that companies and other bodies must follow when reporting financial data. These rules make it easier to examine financial data by standardizing the terms and methods that accountants must use. Accounting standards are implemented to improve the quality of financial information reported by companies. In the United States, the Financial Accounting Standards Board (FASB) issues generally accepted accounting principles (GAAP). The main goal of any set of accounting principles is to ensure that a company's financial statements are complete, consistent, and comparable. This facilitates investors to analyze and extract useful information from the company's financial statements, including trend data over a period of time. It also makes easier the comparison of financial information across different companies and helps mitigate accounting fraud by increasing transparency and allowing red flags to be identified. So, with all the different kinds of people creating small businesses these days, there must be ways to make it look easy to implement. So, I'm going to list the principles and how implementing them can benefit you. What are the accounting principles and how these principles can benefit you? The first one is accrual principle. It's an accounting concept that requires transactions to be recorded in the time period in which they occur, regardless of when the actual cash flows for the transaction are received. It benefits you to have all your transactions organized and well recorded. The next one is conservatism principle, also called the prudence principle. This is the general concept of recognizing the expenses and liabilities as soon as possible when they are uncertainty. This benefits you to be honest with your gains and expenses and helps you to avoid fraud. The third one, consistency principle. This principle states that businesses should maintain the same accounting methods or principles throughout the accounting periods so that users of the financial statements or information are able to make meaningful conclusions from the data. This principle will help you to be confident with the information recorded all the time. Cost principle states that items needs to be recorded as the actual price paid. This principle will help you to avoid losses or uncertain gains at the end of the year. Economic entity principle states that businesses entities to be treated as separate legal and financial entities. Some people go to bankruptcy because they mix their personal finances with the finances of the business. So this principle will help you to avoid that. Full disclosure principle suggests that a business should report all the necessary information in its financial statements so that the users who are able to read the financial information are in a better position to make important decisions regarding the company. It benefits you to avoid making wrong decisions about the future of the business. Going concern principle. This principle assumes that any organization will continue to operate its business for the foreseeable future. This benefits you to always have hope in your business, no matter the circumstances. Matching principle recognizes that businesses must incur expenses to earn revenues and to record them too. It benefits you to be aware that you must make sacrifices to gain after. Materiality, materiality principle. This principle states that all items are reasonably likely to impact investors' decisions making must be recorded or reported in detail in a business financial statements using GAAP standards, General Accounting, General Accepted Accounting Principles. So, this will help you to take care of the investments that were made by the people that trust in your business. Monetary unit principle states that business transactions should only be recorded if they can be expressed in terms of a currency. It benefits you to avoid anything that is non quantifiable in your business. Reli- Reliability principle aims to ensure that all transactions, events, and business activities presented in the financial statements is reliable. It benefits you to consider information reliable if it can be checked, verified, and reviewed with objective evidence. Revenue recognition principle requires that requires that businesses recognize revenue when it's earned rather than when payment is received. This is an aspect that will help you to recognize or well record your revenue. And the last one, time period principle, assumes that all businesses can divide their principal activities into artificial time periods. This will help you to organize your revenues and expenses in consecutive accounting time periods. So, having this information in mind, you may wonder how to start to implement the accounting principles in your business. So, how to implement the accounting principles in your business? First, you need to understand accounting principles. You need to familiarize yourself with generally accepted accounting principles or any other relevant accounting standards in your region. Second, hire a qualified accountant or bookkeeper. If you don't have a background in accounting, consider hiring a professional accountant or bookkeeper who understands accounting principles. They will help you set up and maintain your financial records. Third, choose an accounting method. Decide on the accounting method you will use. The two primary methods are cash basis and accrual basis accounting. Your choice will impact how you record revenue and expenses. Fourth, set up a chart of accounts. Create a chart of accounts that reflects the structure of your business finances. This chart will help you categorize transactions correctly. Fifth, implement double entry bookkeeping. Double entry bookkeeping is a fundamental accounting concept. Every financial transaction should have at least two entries, one as a debit and the other as a credit, to maintain balance. Sixth, keep detailed records. Maintain detailed records of all financial transactions. This includes sales, expenses, loans, investments, and any other financial activities related to your business. Seventh, record transactions timely. Ensure that transactions are recorded promptly. Delayed entries can lead to inaccuracies in your financial statements. 8. Reconcile bank statements. Regularly reconcile your bank statements with your accounting records to identify any discrepancies. 9th, prepare financial statements. Generate financial statements such as the income statements, that is about profit and loss statements, balance sheet, and cash flow statement. These statements provide a snapshot of your business financial health. 10th, implement internal controls. Establish internal controls to prevent fraud and errors. This may involve segregation of duties, approval processes, and regular audits. 11th, budgeting and forecasting. Create a budget and financial forecast to help you plan and manage your business's finances effectively. 12. Comply with tax regulations. Ensure that you comply with all tax regulations and report your income accurately. Keep records of tax payments and filings. 13. Use accounting software. Consider using accounting software to streamline your accounting processes. Many software options are available, ranging from basic to advanced, depending on your business needs. 14th, training and education. Provide training and education to your employees involved in financial matters. Make sure they understand and follow accounting principles. 15th, regularly review financial reports. Review your financial reports regularly to monitor the financial health of your business and make informed decisions. 16th, consult with professionals. Seek advice from accounting professionals or account consultants when necessary, especially for complex financial matters or when dealing with changes in accounting standards. And 16th, stay informed. keep up keep up to date with changes in your accounting standards, tax laws, and regulations that may impact your business. With all these steps, you have your path clear to start. So, as a Dominican accountant, I can say the accounting principles can help a business to maintain all its revenues and expenses updated and well organized. Also, these principles can be related with church principles, which means that all this information is true. By following these steps and maintaining a commitment to accurate and ethical financial reporting, you can effectively implement accounting principles in your business, which will contribute to its long term success and financial stability.